Right. Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So I hope and wish that you guys have given your CFNL audit paper in a great manner. So yeah, I have got a look at the CFNL audit question paper. I will say the question paper was to some extent it was lengthy, but it is manageable question paper. This is such a question paper where you can get qualified, where you can where you can with if you have done a reasonable level of preparation, you could have qualified it. Not so difficult, I will say, not even so easy also, I will say, so that just like that you can go and crack it. Somewhat it is moderate, a kind of question paper, yeah, manageable to some extent. So in this video, I will try to give you a quick overview of all the MCQs. So MCQs are actually very good, very good. Some MCQs are a bit lengthy, but yeah, there are a few MCQs where some straightforward MCQs are also there, but there are many MCQs, majority of the MCQs, 90% of the MCQs are thought provoking, which will ultimately test your understanding of the concepts. Right. Having said that, let me directly go into the discussion. Let me have a look at, let me bring it before you the integrated case scenario based MCQs and the answers for the same. Right. So let me see what they are trying to say here. Ratnesh Limited, herein referred to as a company, is a listed entity. It is in the business of hiring of oil rigs, is established since 2001. The company is having its head office at Mumbai and having its operations across the country. The company appointed MPR & Co, GKS & Co, YX and Associates and ABC and Associates as joint auditors for the financial year 2024-25. The professional work was divided by audit firms among themselves mutually. So as we all are aware, this is a question relating to SA 299, where joint auditors are getting appointed. In case if the joint auditors are appointed, they will mutually divide the work among themselves. However, work relating to information processing, which is part of the control activities, a component of internal control of the company, was allocated to MPR & Co. That means one aspect of the work was specifically allocated to one of the joint auditors, and it was specifically allocated and was not a part of the joint audit assignment. Due to shortage of resources, MPR & Co took the help of the subordinate staff of another joint auditor. So whatever may be the facts, so I do wish and hope that you guys have gone through the facts. I will not spend much of the time in taking you through the facts. Let me directly concentrate on the questions here. See, there will be one aspect in this case scenario. Somewhere they have mentioned in the question that this company, there is one new Ind AS which has been released, which will be effective from 1/4/2026, which will actually come into force from 1/4/2026. But this particular client company has made an early adoption of the aforesaid Ind AS. Now, what is the question they are asking is, in case if your client company has made an early adoption of Ind AS, which is having a material effect on the financial statements of the company, and it was also disclosed in the financial statements. The management did not hide anything. They have clearly disclosed also that in the financial statements. See, if you have referred to SA 706, this is one such example which can be highlighted in the emphasis of matter paragraph. Even in the examples also, even if you open our material and see, we have given in SA 706 the examples of the matters which will be highlighted in the emphasis of matter paragraph. One such example is this early adoption of Ind AS. So this matter will be highlighted as a part of emphasis of matter paragraph. Now, coming to the next question, which audit firm will be responsible for lapses in the audit procedures for testing of control activities relating to information processing in terms of SA 299? In case the audit procedures are not performed professionally by subordinate staff. See, this is regarding responsibility related matters of SA 299, where a work has been specifically allocated to one of the joint auditors, and in respect of that work, anything goes wrong, only that joint auditor has to face the consequences. So in the given case, the work has been allocated to this internal control activity related work was allocated to MPR & Co. So only this firm will be held responsible. So each joint auditor will be held responsible only for the work which was allocated to them. Next. Coming to the next aspect, which of the activities verified by the subordinate staff of ABC and Associates with relating to control activities and information processing? So guys, here they have given 4 such activities. They wanted to check this is the thing. Yeah. So they are as a part of that control activities in the area of information processing, they are saying few things have been checked, like actual performance was reviewed against the budget one. So input data and numerical sequence checks, transfer authorization for access to computer program, controls over implementation of new releases. Now, what is the question they are asking is, this is a bit, they have gone deeper. See, this is the question where they are not testing the concepts. This is the test. This is such a question where they are testing your remembrance part, which I don't personally agree with it. But unfortunately, these kind of questions are getting tested. So which of the following are not the specific procedures to evaluate the relevance and reasonableness of, no, this is not the question. So where is that question? Right. Which of the following activities which of the following activities verified by the subordinate staff of ABC and associates pertain to control activities? So which activities will fall under control activities relating to processing? So not this one, here. The second one, edit checks and numerical sequence checks and controls over implementation of new releases. 2 and 4 will actually form part of that information control activities over information processing. So 2 and 4 will actually form part of this control activities information processing. Next, which of the following are not specific procedures to evaluate relevance and reasonableness of Mr. C's finding and consistency with other audit evidences? This is a question from SA 620. If you want to evaluate the relevance and reasonableness of auditors' experts' work, what and all you will try to perform? So here they have given 4 steps here. Performing corroborative audit procedures, yes, this I will do it. Will you perform detailed analytical procedures? Yes, we will perform analytical procedures. Reviewing the data for completeness and internal consistency and verifying the origin of the data. These two will not form part of those procedures to verify the relevance and reasonableness of experts' work. So that's why the question is also that only. Which of the following activities are not the specific procedures to evaluate the relevance and reasonableness? The first 2 activities actually will form part of relevance and reasonableness of checking the auditor's experts' work. 3 and 4 are not audit procedures which are suitable for checking the relevance and reasonableness of auditor's experts' work. Okay, so 3 and 4 will not form part of it. Next one. Next question. So now we have one general question. CAX is the engagement partner of Good Work Limited since last 5 years. Since he is familiar with working of the company, they have approached CAX to perform various other assignments for them. Which assignment out of the below can be accepted by CAX as per the recent decisions of the Ethical Standards Board? So which activity he can perform? He can't do the compilation of the financial information. Actually the answer for this is he can act as an authorized representative for their foreign customer. For the same client, you can't act as authorized representative, but for their customer, if you want to act as an authorized representative, you can do it. And to represent the company as a trademark attorney, no, this also you can't do it. To act as a non-executive director in its joint venture company, this also you can't do it. So you can act as an authorized representative for their foreign customer. Next one. So let us have a look at this. Next question, SDG and ESG. PP Limited wants to make disclosure on its performance against the various principles of 9 national guidelines on responsible business conduct to meet the reporting requirements on ESG parameters called BRSR reporting. Okay, this is a question from SDG and ESG. Accordingly, the audit firm agreed. What is the question here? Yeah, they are asking the question on methodology. What methodology you are required to follow for BRSR assurance providing? So here they have given the steps here. Preliminary review of ESG report and parameters, on-site assessment or verification of the ESG report, issuance of the assessment report and assessment, review of responses and clarifications on the findings. Here it is not deliberation, it is submission of findings. It is not recommendation, it is something like here they use some other phrase. See, this is also something which I have to cross verify before I give the answer here. Yeah, some questions are not something which are concept testing, which is purely expecting you to remember the order, remember the terminology and all. So this is also one such question. So here the correct answer is the 4 steps are, these 4 are in correct order. A, B, C and D is the proper methodology for this. Next, coming to the next question. CP and Associates are appointed as the peer reviewer of RS & Co Chartered Accountants. On going through the profit and loss account of the firm, it was observed that in the following assignments, they had charged fees, which is contingent upon the findings or results of such work. In which of the below assignments undertaken, RS & Co have violated? See, as we all are aware, you should not, as a chartered accountant in practice, you should not accept the engagement where your fees is contingent upon the findings of the audit. However, there are some exceptions. There are certain engagements where you can accept your fees either on contingent basis or as a percentage of the outcome. So which is permitted, which is not permitted. In case of assignment as a liquidator, fees charged on a percentage of realization of the assets. Yes, it is permitted. In case of assignment of auditor of a cooperative society, the fees are charged on the percentage of the paid up capital. This is also permitted. In case of assignment for appearing before the income tax appellate tribunal on behalf of the audit client, the fees are charged based on the reduction in the demand note. No, this is not something which is permitted. In case of assignment of cost optimization, the fees can be charged on the basis of benefit derived. Yes, that also you can do it. Whereas what is not permitted is, this is not permitted. This is not permitted. So that will be a violation of the professional ethics. Next, coming to the next integrated facts. A Limited is a top 1000 listed company which is engaged in the manufacturing of edible oils, having its registered office at Mumbai and its branches all over India. HG and Co. chartered accountants have been appointed as statutory auditors of A Limited for the financial year 24-25, and they are the Mr. H is the engagement partner. They are having a net worth of 500 crore, turnover details, net profit and all they have given. Why they have given is to make you understand that these companies are required to comply with the CSR requirements. A Limited has okay, let me go to the questions, then I will come back to the facts. Which of the following is not a current period consolidated adjustment? See, they have given some facts here. Even without reading the facts also you can answer this question actually. So they are asking, they have given a few points here. Out of that we need to mark which one is not a current period adjustment. So if you read the options here, adjustment relating to harmonizing the different accounting policies. Yes, this is a current period adjustment. Adjustment to the financial statements for recognized subsequent events. This is also a current period adjustment. Determination of goodwill or capital reserve as per applicable accounting standards. This is a permanent consolidation adjustment. So this is not a concurrent period adjustment. This is a permanent consolidation adjustment. They are also asking the same thing. Which of the following is not a permanent consolidation adjustment? This is not a which of the following is not a current period consolidation adjustment? This is not a current period consolidation adjustment. Why? Because it is a permanent consolidation adjustment. Then coming to the next one. Failing to keep the money in a separate bank account. See here, the subject matter of the question is this one. CAH in consultation with management decided to visit 10 out of 15 branches of A Limited within a period of 15 to 20 days situated in various states of India. Management decided to pay CAH advance of 5 lakh rupees against the estimated expenses of 5.25 lakhs. So company has given the advance to a chartered accountant. Do you think advance is also required to be kept in a separate bank account? No, advance is not required to be kept in a separate bank account. Only the money which the client or client has given to you, which is required to be utilized, utilized for specified purposes, that only should be kept in the bank account, separate bank account. However, there was a explanation also in which the council has clarified when it comes to advance that need not be kept in a separate bank account. So that need not be kept in a separate bank account. So this is the option here. No, in this connection, the council has made a suggestion that advance received by a chartered accountant against services to be rendered does not fall under clause 10 of the part 1 of the second schedule and need not be kept in a separate bank, and not keeping them in a separate bank account is valid, and hence the CAH will not be guilty of professional misconduct. So this will be the correct option. Next. Now CSR amount. When it comes to CSR, they have given some details here. So the company is required to spend some money on CSR. There is a 20 lakh rupees which was unspent in respect of other than ongoing projects. So if some money is there which is other than ongoing projects, if you did not spend it, that amount is required to be transferred to a fund specified under Schedule 7 within 6 months from the expiry of the financial year. So that's what they are asking here. So whether the company has transferred unspent amount of 20 lakhs to a fund specified in Schedule 7 to the Companies Act within a period of 6 months of the expiry of the financial year. Yes, this option is the correct option. If you look at the remaining options, in some cases they have told fund specified in Schedule 3, which is wrong. Here they have told fund specified in Schedule 7, but they have told within a period of 3 months. This is also wrong. Here they have told fund specified in Schedule 7, which is also wrong. The correct option is it has to be transferred to a fund specified under Schedule 7 within a period of 6 months from the expiry of the financial year. Next, non-compliances. Now here the subject matter of this question is, let me show you that aspect here. This one. CAH during the course of audit noticed the enforcement director has issued show cause notices for various non-compliances with the Foreign Exchange Management Act, and regulatory action against the company may be expected. The board of directors have not mentioned the same in their report as the outcome is uncertain. This is also not reflecting anywhere in the financial statements. However, CAH thinks that it is relevant for users understanding. a matter which is not disclosed in the financial statements, which is not presented or disclosed in the financial statements, but auditor feels that it is essential for users' understanding of the financial statements, that should go to other matter paragraph. If something is already disclosed or presented in the financial statements, emphasis. If something is not disclosed or presented in the financial statements, but if you want to highlight it somewhere in your auditor's report, there you can make use of other matter paragraph. So here you can make use of other matter paragraph because the matter is not presented anywhere in the financial statements. Now we have one more case scenario. So here this is an interesting question relating to audit of banks and NBFCs they have asked. But once again, a few unfortunate things here. See, first question they have asked it on. This I will answer. How will SQC associates report under CARO? See, they have undergone revaluation. See, from audit reporting this time we had very interesting questions, that too straightforward, not very complicated. MCQs itself, this is the third question I am saying it in the MCQs from audit reporting chapter. 6 marks, somewhere close to it, and that too not complicated, very easy questions. So our revision of the audit reporting chapter, our revision of the CARO has definitely should have helped you a lot on this. Next. Okay, so what is this question all about? Here, if you see, so there is one company, there was revaluation conducted, and this revaluation was done by a registered valuer. In the area of building, there was a change in 10%. Because of revaluation, the change is 10% in gross carrying value, whereas when you compare the net carrying value, the change is 12%. In the CARO, we ask you to check whether the change is 10% or more in the net carrying value of the assets. So what is a gross carrying value? Not relevant. If the change is 10% or more in net carrying value, you need to mention the amount. So for buildings, since in the net carrying value, the change is more than 10% in the net carrying value, here amount is required to be stated. Not just that, even in the software category also, there was a downward revaluation of adjustments, and it constitutes 10% reduction over gross carrying value, whereas in the net carrying value, there is 16% reduction. So here also we have to see the net carrying value. So since there is a reduction of more, change is a 10% or more, either upward or downward, we need to mention that amount here. So if we look at the answer here, both the revaluation of buildings as well as software assets is required to be reported. Mention that valuation is done by the registered valuer and even specify the amount of change. Why? Because the change is 10% or more in each category of the assets, in net carrying value of assets. Next one. Now coming to the next part, next question. Yeah. What type of opinion or reporting SQC associate should issue in their auditor's report of MRP? 2 observations. Okay. So a few facts they have given here. They are conducting audit of some entity in which they have 2 observations, where the company has procured raw materials. As on 31st of March, trade payables form a significant portion. There was so many issues, delayed confirmations and all. The management did not respond, and he considered risk as very high. But ultimately he found that, he has obtained evidence that trade payables have been appropriately recorded. So this is an area which is a high risky area where you spent more audit procedures, not materially misstated. It is not materially misstated. It is not something which is very fundamental to users' understanding. But the thing, it is a high risky area where you spend more audit efforts. So this item, you have to show it as a key audit matter. You need not modify. Why? Because you have ultimately convinced that trade payables has been appropriately recorded. So you have to show it under key audit matter paragraph. See, once again, audit reporting related question. One more, 2 marks, 8 marks till now from the audit reporting chapter. Next one. So this will be a key audit matter. A batch of finished goods worth 1.8 crores was found to be missing during the physical verification of inventory. It constituted a significant portion of the value of inventory. The management stated that it was due to clerical error in location mapping and claimed to have treasured the goods post the year end. However, the documentation presented was insufficient and not independently verifiable. So auditor is unable to obtain audit evidence regarding inventory. If it is only material but not pervasive, we will give a qualified opinion. So second observation requires the qualified opinion. So if you look at here, disclose the observation 1 under key audit matter paragraph and qualify the audit opinion due to material but not pervasive limitations of observation 2. So you have to give a qualified opinion for that. Then you are required to calculate amount of revenue leakage. So this is one such question where they have asked us to do some calculation part here. So they have given different things, like say for example, the company was sanctioned a short-term loan of 5 crores at an interest rate of 9.5%. But in the core banking solution, the interest rate was shown as 8.5% only from the beginning of the financial year. So that means 1% per annum, there was a revenue leakage. So on 5 crores, if you multiply 1%, the value will come to 5 lakhs. Next, The bank has sanctioned a working capital of 3 crores to NK Private Limited. The bank's circular mandates a processing fees of 1%, but it has charged only 0.5%. So on this 3 crores, 0.5% of revenue leakage is there. So if I do that, all the calculation here, it will come to 1,50,000. So on 3 crores, 1% they should have charged. They should have charged 3 lakh rupees, but they charged only 0.5%. So 1,50,000 of revenue leakage here. The bank has sanctioned a credit card limit of 4 crores to DAF Limited with a condition that stock statement must be submitted monthly. DAF Limited has not submitted the stock statements for past 3 months, triggering a penal interest of 2%. For 3 months they did not submit it. For every month they have to submit. For 3 months they did not submit. So 2% per annum, 4 crores into 2% for 3 months. So if you do that, it will come to somewhere around 2 lakhs if I'm not wrong. So but anyhow, let me do the calculation. So when we are thinking logically, sometimes calculation goes off. Just let me cross confirm. So 4 crores into 2% penal interest for what duration? For a duration of 3 months. For 3 months they did not submit the stock statement. So which will come to 2 lakhs. Yes, 2 lakhs. Next. An exporter, GHI Exports, availed a packing credit of 2 crores at 6% per annum for 3 months. But repayment has been done with 1 month delay. The overdue interest is 12% as per the bank circular. However, overdue interest rate for the delayed period was not applied. So that means for 1 month overdue interest, since if the amount becomes overdue as per the circular, 12% they should have charged. But it was not updated. That means for that 1 month of delay also 6% only they have charged it. For 1 month delay also 6% interest only they have charged. They should have charged how much? 12%. So that means 6% on 2 crores, 6% for 1 month. Okay. So if you do that calculation part, on 2 crores, there is a 6% of revenue leakage, that too for a duration of 1 month. 1 month delay is there. So it will come to somewhere around, as per my calculation, it is coming to somewhere around 10,000. So 2 crores. So 2 crores into 6% of loss into how many months of delay? 1 month of delay. 1 divided by 12. It will come to 10,000. So if I do all the calculation, 60 and 8,60,000 is coming. How much it is coming? 8,60,000 it is coming. So previously I got some other answer. So I think somewhere I have done something here. 4 crores for 3 months, triggering a penal interest of 2%. Okay. 4 crores, 0.4 crores into 3%. 4 crores into 3% into 3 divided by 12. Sorry, 2%. Just give me 1 minute, guys. Previously I got some other answer, so just I am cross verifying. Okay, so here we have, sorry, 4 crores, right? 4 crores into 2% into 3 divided by 12. So yeah, it will come to 2 lakh rupees here. Yeah, on this we have 1,50,000. Here we have a loss. On this 5 lakhs we have, on this 5 crores we have 5 lakh rupees of loss. Is there anything extra here? No. So if I do all the additions here, how much it will come to? So 8,60,000 is the figure I am getting. So let me see whether anything is there here. No. So it should be 9,50,000. Somewhere I have done it wrong here. Okay. So we did the calculation part. I did the calculation part previously. So somewhere something I have messed it out as a part of my calculation. Where are the facts? Yeah. One month delay, 2 crores at the rate of 6% for 1 month. How much overdue interest rate was not applied? On 9 lakhs, we have 5 lakh rupees. Here we have 1.5 lakh. For 3 months of delay, 4 crores has not submitted the stock statement. So 4 crores into 2% per annum. For 3 months, they have done the delay. Okay. Fine. Right. So let me proceed further with the subsequent question. We'll come back to that. So I have done that part, but I think it's not thing here. Yeah. So let us come to the next part. Select the correct option after calculating the aggregate risk adjusted value of above funded assets for reckoning the minimum capital ratio. So they are asking here risk adjusted assets value. So if you see here the risk adjusted assets, this is also something where they are expecting. See, generally I expected the question on the ratio. What is the tier 1 capital ratio? What is the tier 2 capital ratio? That is what the question I have generally expected. But here they have given the question to calculation part they have given. So here they have identified a few assets. For cash, risk weighted is 0. Bonds of public financial institution, 100% risk weightage. Current assets, loans to staff. Here also, if I try to cross verify with this thing here, yeah. So fixed assets, here also 100 we have. Current assets, loans to staff will be 0. Whereas this thing, domestic sovereign state government guaranteed claims which are default for 75 days. That means less than 90 days if they are in default. Here it is 20%. So this is something I have referred to the material and I have done it. So 50 plus 30, 80 plus 12, it will come to total 92 lakhs. Okay. Sorry, 92 crores will be the thing here. Okay. So 92 crores will be the risk adjusted value of the assets. Fine. Right, guys, that's all. Okay, so 3 crores, 0.5%. Here it is 1.5 lakh. 4 crores, triggering a penal interest of 2%. Okay, guys, so this is what regarding a quick overview of the MCQs. Hope you guys have answered the MCQs, and see you.